Yes, lads, we're back again with another trade. Managed to get a nice reversal today, even though we have NFP tomorrow, so quite happy with it. Again, was pretty conservative on the profits, but got a nice 3-to-1 risk to reward-ish. So yeah, I'll take you through the trade now. Right then, so straight onto the daily graph. As you can see, we had a very big reaction from the previous trading day, which was here on the 2nd, where we did actually take these daily lows there and then reversed a lot of, buying pressure coming back into this range there. So for me, that pretty much gave away, right? The bias is obviously bullish then going into the next couple of trading days. And we also had SMT divergence with ES, where S&P failed to take this previous daily low. So for me, that was a good indication of a reversal on the daily and a clear liquidity sweep on the daily. So as I do, I go into the daily, drop into the hour. So I'm looking for any 1 hour imbalances which can provide support for the market. So as I said here, we had an aggressive manipulation down here, and then we had that distribution up here, where we got that true change in the state of delivery here, and then we've had several hourly fair value gaps which have supported price. So for me, it was just about finding a fair value gap where I thought price would react off. For me, it was this one here, just because it was a larger imbalance that we hadn't properly filled, and also we previously reacted off it before, so I knew this would be a strong area for price. So that was that for me. And then in terms of my targets on the day, I obviously had this previous day's high there, so that's a clear point of interest that I always mark out on the graph. So then moving on, what do? I drop into the 15 minutes straight from the hourly, and I mark out the midnight opening price, and I look at the structure of price. So as I've said before, time-based liquidity is extremely important, so I'm looking for any key liquidity areas where I think price can reverse. And because we've had this consolidation here, we had the London range there, and then we had the Asian range low there, and then, like I said, we had this hourly imbalance there. So these were the key points where I wanted the market to reverse. And also, another factor is we had 8:30 news, and then we had 10 o'clock news. So that's two major news events. And with this in place, you always look to trade post 10 o'clock, always. If you have two major news events on a day, always wait for both of them to finish. Never trade in between. Never trade before. So then, what was I waiting for? I was obviously waiting for that 10 o'clock, but I wanted to see how price would react to this range. So you can see, as I said, we had the new day opening price there, the midnight opening price, and we formed this range there. As soon as 9:30 and we had that initial manipulation up, it was very much seek and destroy. So we took out the top of this range. Because we took out the top, we then moved to the bottom, which then allowed for the distribution. So that's a classic swing breakout sequence, which I was looking for, and that's exactly what we got. So if we go into the 1 minute then, and I'll show you the full process. So during the first 30 minutes, you can expect seek and destroy conditions until that 10 o'clock news where you get the manipulation. And you can see here, you can imagine the amount of people who was faking in and out of trades. You can't trade that, it's untradeable, right? And we also generated these equal highs there. Obviously, looking at the previous daily high, which was across on that chart there. So then I was waiting for 10 o'clock to open up, which it opened up there. And straight away, what happened? We went down, came into this hourly fair value gap. Here, pushed up again, fake move, came back down. So what I wanted to do was wait for that change in the state of delivery. We didn't have that here because it's this set of candles there, very critical. So people may have tried to enter here, but again, you had no inversion fair value gap, no fair value gap that is completely balanced. Therefore, it doesn't provide an entry for me, so that's why you wait. And then we had the next and final push down there, obviously taking out this sell side liquidity there, and also ES provided a stronger reading where it failed to take this low as well. So ES was very much heavily trending upwards today. And then simply, it was just understanding order flow. So like I said, I waited until post 10. We had that volatility in the market now. It was better price conditions. Straight away, inversion fair value gap there. That could have been the first entry, but I used that to determine order flow. As soon as we broke above this high there, that is changing the state of delivery. So for me, it was looking for a fair value gap, which we got there, which I could enter on, and then targeting the previous day's high, which was here. And if you look at my executions, hopefully they come up, which they do. So yeah, entered as soon as we came here at midnight price again, and then targeted the high there. And then I did actually have more ambitious targets, but I got stopped out, so I trailed very aggressively as soon as we tapped that high. Because I wanted to see us explode up, but we didn't. We consolidated, chopped around lunch, and then eventually grind it up. Quite simply put, my target was from the bottom of the range there to the top, targeting this area here, and we eventually went up even higher to the -3 to -4 SD range, which is where price is situated now. So that was basically the trade on that, and you can also see there, again, changing the state of delivery candle here. And how do you know that we're not going to keep trending down? Quite simply is, this is a balanced price range now. We've been offering sell side, buy side, sell side, buy side. The fact that we've broken beneath this, then came back into this range, tells me that this is the manipulation leg, this is the distribution leg. We shouldn't come back into this range if we're bearish, and we did, which is why it made me confident on the trade after taking out both sides of liquidity, like I previously said. Took out the high from the range, then the bottom, both sides are taken. Now we go to the true drawn liquidity, which is up here. So yeah, that's just a little video on my execution and stuff. $500 profit, very nice. Only 4 contracts, 3-to-1 risk to reward. Very happy with it. Keep it moving, and I'll see you in the next one.